my contention about AI versus where is it going to take over the accounting industry versus not. And I'm of the opinion for some things, yes. For some things, no. In the situation I was just describing, it's a hard no right now, given what I can see in the marketplace, what's going on with AI. I've tested on my own a couple of times to try to do some of this analysis. It's not up to snuff yet for those types of things. Don't depend on technology to be your friend in this type of thing. It could crunch a lot of data, but it can't decide for you. Welcome to Those Odd Numbers podcast. My name is Jason Snider. I'm the founder and CEO of Main Street Financial Group. We are your fractional finance team.
I'm Summer McFarlen. I'm a CPA and certified tax coach. I'm also the co-owner of Main Street Tax Group, where we do strategic tax planning so you can keep more of what you earn.
I am Masheka Turner, and I am the owner of Bright Skies Business Services. We are your outsourced accounting firm and profit first strategies. And we are here to help you create wealth through your business by gaining clarity around your numbers. Hello there, and welcome to another episode of These Odd Numbers. I am Masheka Turner, and I'm here with Jason Snider and Summer McFarlen. And today we're going to be talking about, do you know who your most profitable customers are, and the ad spend on targeting those most profitable customers? So let's just jump right back into it.
I can take a little bit of a lead on this because we've just been doing some of that internally in our own firm, trying to identify our best lead sources, because most of our business comes through referrals because it's a high trust, people focused business, if you want, accounting and tax. And so relationships tend to be the best source of our leads, but we had to be clear about who was providing those leads. Where were they coming from? Why were they coming to us? And so we did a deep dive over a period of a few months of looking at lead sources, closed sales, current customers, where did they all come from, and trying to better define that, which ended up for us shifting a little bit of how we were focused on our business development. And I would say business development encompasses marketing and sales. There are two different functions, marketing versus sales. I think this is going to be primarily focused on attraction marketing. Sales has its own metrics to focus on, and many of our clients don't have full-time sales staff that we're talking about. So marketing tends to be the budget item that gets the most attention when it comes to growing the business that we encounter. And the two scenarios that we'll see is for us, because we have a lot of e-commerce, is ad spend. And I would count that as marketing and not as a sales expense, because it doesn't convert. It's not an instantaneous. So to me, that's a marketing attraction spend. And then also our contractors tend to be heavily relational. So usually the owner's highly involved in the sale process up until they're 3 to 7 million revenue range in my experience and things. So most of this is going to be about the marketing side to keep it, because that's where I see most of the, and I'll say mistakes. And the reason I say that is they're not intentional about who they're trying to attack. There's very little to no analysis of where the best customers are, who they are, what's the profit level, and things like that. And just doing some light amount of that, working with your bookkeeper, accountant, and if they don't have that experience or knowledge, then you probably should look for somebody who can provide that guidance for you. Or you need somebody on staff to do that. It's super critical in my view. You're attracting the right customers, profitable ones, because it causes other issues. And I think it's the biggest contributor to gross margin erosion is lack of any review and analysis of who's profitable customer or not. So I can continue on. I want to give Masheka and Summer some airspace to share their experiences as well.
You covered a lot. One of the things I'm always going to take it back to is bookkeeping. I know. So let me go back a little bit, because we are talking about ad spend, but I think one of the things that I need to point out that I see with my customers is there needs to be a way to actually measure the profitability of services and customers. I think it's impossible to have that conversation without making sure that we're dialed in on that part. Looking at, okay, the type of services, the type of products being sold, whatever it is, there has to be something on the bookkeeping that actually gives you that data. Because Jason was saying, if you figured out that a certain service brings you this, then you want more people to provide that service to. If you have figured out that a certain product brings more, then you the same thing. So I think the first thing I want to tap into is making sure that we have the right accounting system set up to actually track that data? Because this is not even a conversation if that's not done on the front end.
Yeah, tracking is very important. There's a couple of techniques that we use. One is I'll use the term activity-based costing. And for me, that means assigning its place on the P&L or balance sheet by the intention behind it. Obviously, there's tax considerations and gap considerations as well that we have to manage. But generally, if it's left to me and I'm advising the client, I'm going to ask if we can set up that type of a system, because I just don't want the ad spend there. I want any supporting software, any personnel, labor, hours. I want all of that there because I want my clients to know this is your spend for attracting customers to your business. And if you don't have that broken out, you don't have those separate items broken out, even though they could be organized somewhere else on the P&L, depending on how it's set up, it can cause a lot of misunderstanding to the business owner if they're not aware that they need to be looking at the entire spend of attracting a customer. And just because it's labeled software doesn't mean it needs to be the place. It should be somewhere where it's better visibility of what it's looking or what the intent behind the expense is providing to the business. And Summer can give maybe some feedback from the tax side, because it would sometimes conflict with what their CPA on the tax side has set up or asked them to set up to track and things. And there's ways to manage that, I think, to keep both sides happy, if you will.
Yeah, I'm not sure that the tax people are necessarily concerned with.
Topic of conversation of the past. So I do bring it up. It hasn't been very much, but it has come up with why is that? Where's this? And then he's like, oh, okay, it's under here. Okay, no.
Yeah. Yeah. For those CPAs that kind of move into a more advisory role, CFO, and really work with businesses, I feel like maybe they're more dialed in. So maybe I almost want to say, I don't know if I want to say it or not, some of the more younger and modern, or that I don't know what I'm trying to say, because I'm kind of old lady and I don't want to,
Oh, no, you're not.
I don't want to put us down. So anyway.
So I will give an example of how I see some people tap into it. For some accountants and CPAs that do work on the tax side, or either whether it be the federal taxes or county taxes, sales tax, or whatever. For my particular business, of course, I work with mostly weight loss clinics, med spas. For those particular products, some of those products are taxable and some of them are not. And so a lot of times the CPA may get involved in what needs to be right, making sure that it's coded, because that makes a big difference when it comes to reporting to the state. That's an example that I can think of off the top of my head.
That's a real good example. I don't particularly do sales tax. So because of that, because it's hard. I know that sounds crazy, right?
No, I get it. I get it. I get it. I love this topic though, especially because of so Jason, I've kind of experienced the same thing. Because the med spas and weight loss clinics, that's an emerging market. There is a lot of people, and I hate to say some of them are good, but there are a few snake oil salesmen out there. And a lot of people are getting into showing you how to market your clinic or marketing your clinic for you. And one of the first things that I recommend for my client is, what's the measurement? What are they going to be able to provide you with? Because again, like you say, if we're trying to see who our most profitable client is or what our most profitable product is, if we don't have anything to measure, we are wasting our time. And sometimes, Jason, I'll be honest with you, sometimes people are throwing noodles at the wall just because let's just be honest, y'all. Y'all know 5 years ago, 10 years ago, med spas and weight loss clinics it was just not a thing in society like it is. It wasn't. So this is a emerging market. Now it's like commonplace, but I don't know if I would even know what that was 15 years ago. Weight loss clinic, there was some that popped up, but it wasn't like a thing.
Or Botox. So, Botox had a wrap, right? It was just for reducing wrinkles.
It. And
it has some health benefits.
Absolutely. People set their budget for beauty treatments.
Yeah. My dad said he was thinking about getting some because it's hurting.
So I don't want to get off topic with our pot, but that's when it gets into what's taxable and what's not taxable. Because technically medical things are not taxable, but it depends on what you're using it for. And that's a whole nother conversation I don't want to get into.
That's a very good point.
More of this is going to start to come up as we get more into this. More of it is going to start to come up because it's a part of our everyday lives, like cell phone. 20 years ago, 25 years ago, nobody had a cell phone bill. Now everybody has one. So maybe now, 20 years from now, everybody's going to have a weight loss bill and a beauty bill. It would shock me though, but think about it. 20 years ago, did you have a monthly cell phone bill? No, probably not.
Yeah. No, I was born before cell phones. So.
Me too, but we're not going to go there.
Don't throw that brick at anybody.
That's exactly what. We're not going down that road. But on a serious note though, again, as much as we want to serve our mission and as much as we want to help our clients and customers, we have to think about profitability is what's going to keep you in business and keep you here.
Yeah,
doing
that's
it.
really why it's important to know all this.
That's it. So
We're
that's just the bottom line. This is a part of it. You have to be tapped into it.
And I'll provide some additional nuance for marketing spend types, if you will. So e-commerce, there's a lot of data. Sometimes it's hard to sift through, but we did I'm not sure how it would be termed, but we took all of our clients in e-commerce, smashed all the numbers together to come up with just to see what was going on, what was working, what was not, just to get some baseline trends and share that with our clients. So we did a study, if you will, that we shared it with all of our clients. One of the things we noticed was there were some clear differentials between marketing spend, where they were spending, ad spend specifically in this case, because that ends up usually being 90+% of the marketing budget for an e-commerce business is paid ads. And the thing was pretty clear was our clients that had one or more of SEO and email marketing down working pretty well, their net margins were plus 20%, 20 to 30% net margin. Yeah.
Wow.
Yep.
Wow.
And then those who depended primarily, and I forget the exact number, but had a big focus on Google ads or Facebook ads or a combination of those, their net margins were below, I think, 12%, if I remember correctly. And my theory of that was the people who are responding to ads are value driven in the sense of price versus the cost. It's easier to compare in those situations as well. And those who were email and SEO related, those customers were more focused on the quality, experience, product, and things like that. It was just my theory of things, of the behavior. But if we hadn't done that analysis, we wouldn't have been able to share that with our clients. And hopefully that impacted them to focus building up one of those two marketing channels, for lack of a better term, and not be so dependent on ads because you're playing on somebody else's ball field, if you will. Once you're in the paid ads game, you have a lot more constrictions of what you can do versus what you can't. You can own your email list and you have a big control over SEO outside of the algorithms and things. So that type of analysis you can do in your own business, no matter if it's not e-commerce or not. You have to do a little bit more probably on the lifting, if you will, getting the data together, and definitely work with your accountant, bookkeeper, CPA to help. And again, if they're not willing or can't do those things, then you probably should look for somebody who can do those, because that's the real value of the bookkeeping comment that Masheka was making earlier, is it has to be organized in a consistent, clear fashion to do this type of analysis. And if it's jumping around and certain expenses are scattered throughout the P&L, that doesn't help you at all, other than giving a net margin number, which you need more nuance and focus if you're going to do the type of analysis that I was just describing. It's available to everybody. There's so much data out there. You just have to dig a little bit deeper, dig a little underneath, if you will, and even create your own systems with your advisor, bookkeeper.
I love that. I love it. I say all the time, nobody wants bookkeeping. Nobody wants to pay for it. But the math is you can't have this without it.
Yep.
So all those cool things, profit strategy, the most out of our net income, everything Jason was talking about with the data around, you cannot have it without it.
One other comment I just thought of when we were talking about this is my contention about it versus where is it going to take over the accounting industry versus not. And I'm of the opinion, for some things, yes. For some things, no. In the situation I was just describing, it's a hard no right now, given what I can see in the marketplace, what's going on with AI. I've tested on my own a couple of times to try to do some of this analysis. It's not up to snuff yet for those types of things. And the example would be an Amazon spend or a Walmart spend or that just shows Google on there. AI needs the data to be able to parse it and decide where it's going to go. That's not enough data for it to decide where it should go on your P&L, and especially if you're doing some type of thing that we were just describing of more nuance, or I described as activity-based costing. None of those work with the current AI systems at all. None of them. They're all dependent on the information the bank provides coming over, or if you're manually entering it for some reason, it still needs that data to be able to do its thing, and it's just not available. So my counsel is for those who are considering these things and AI, they're likely going to be oil water right now. You're going to have to be more involved, more nuanced and approach it. Isn't going to be something you can just set and forget it unless you hire a professional to implement it for you. Don't depend on technology to be your friend in this type of thing. It can crunch a lot of data, but it can't decide for you.
And so I don't want to get too much off topic, but I'll just say for the AI, the way I see it is people are scared and all this, but I actually see it as an opportunity. The way I look at it is let AI do the things it can do. If it's doing some of the more tedious stuff, some of the more number crunching stuff, then I just feel it leaves room for us in the industry to really take the data that it's already done and really do something magical with it. Really get those numbers and say, okay, explain this is what it means, because you weren't spending the time over here doing more tedious work. Now that it's done that, now I have more time to sit down and talk about what this really means and what our next steps can be. I'm personally excited about some of this. AI is not going anywhere. I look at it just like, maybe I'm also optimistic. I look at it like the internet. We were all 2000, we were all worked up about it, and look at what happened. It opened up a whole new world. And so I just feel like AI is going to be the same thing. Of course, there may be a little bit of us being uncomfortable on the front end, but once we embrace it into our lives, it'll just be a whole new world and more opportunity.
It's not like that Staples button from a few years ago. You just press it. Yeah, it's
But
Right.
as far as taking some tasks off of your,
up correctly. Yes.
if you set
Right.
it up correctly. But yeah, I agree, Masheka. I'm super excited about what it can
I know,
do
yeah.
for me. I'm demoing a software tomorrow that it'll actually do the data entry, which I really hate doing on a tax return. And then it'll do a report where I can actually have a meaningful conversation with my client. But I know my clients, I know them well. And I think that's impactful too, that I have that information, because AI really doesn't.
And I forget which way you said, but it can crunch a lot of information, a lot of data. So some of the things you can do, again, working with the right professional who's up on how you want to organize things. The business owner ultimately is responsible for the direction of that. And I think we got an episode coming up about how to get the best out of your relationship with your accountant professionals. But it is ultimately ask the questions. Are they doing it the way that you would like, so the data you can see? You may not be able to describe it to them exactly, but give them the outcome of what you're looking for. And again, if you get pushback and you're intentional about what you're trying to create, the transparency and visibility you want to make decisions, again, look for somebody who, obviously we all work in that area, but it's important that you have a trustworthy professional that can be that guide and help you get those things set up, provide that direction. Maybe may not do it for you if it's too costly, but at least point you in the right direction. And there's plenty of good books that are Profit First for managing the cash side. There's lots of, you just need to take that intentional step of what you want to achieve with your business, the goals, and then how you're going to go about it. Don't default to what everybody else is doing or what your accountant says without We want questions. I look at whenever I hear a client or a prospect asking me good pointed question, okay, then I know this is going to be likely a very good chance is going to be a long-term successful relationship for us both. But if it's
I love it.
a little bit of whatever, and they're not sure, then I either know we're going to have to be a lot of hands-on, or they're going to jump ship because they're not sure what the relationship's about and if it's going to work for them and stuff.
I actually think that's a good way to wrap this up, because our next episode is actually going to be talking more about how to get the most out of your relationship with your accounting, bookkeeping, tax person. So I think that's a great note.
We'll tie up to today's episode. Thanks everybody for listening to another episode of Those Are Numbers with Masheka, Summer, and myself. And we will see you next week on our just described episode of ROI.
Great job, Jason.
Yeah, thanks, everyone.
This content is for general informational purposes only and is based on current law and guidance as of the date of recording. Tax law and regulations are subject to change. This discussion should not be considered tax, legal, or investment advice. Listeners should consult their own tax or financial professional regarding their specific situation.